Good morning all, this is Marvin from StockMarketPlan.com with your Stock Market Watch for March 21st, 2011, Monday. Hope all of you had a wonderful weekend. I sure did. Spent a lot of time with family, and it's just a beautiful day out here in Central Florida. Let's go ahead and look at the S&P 500. Friday's cast is pretty much boring, so I really didn't do anything. The market basically traded right inside of where we thought it would be, and really nothing changed as far as the current condition of the market, and actually the same thing holds true for today. There is the trend line that we've drawn before, okay, right over here, channeling down, and there's our 50-day moving average, the red line, our 20-day moving average. Looking for this 20-day, see if it crosses over the 50-day. That can be just another addition to technical weakness. I'm paying attention again, and I reiterate this message to you, is the volume patterns as we bounce back up into what are now areas of resistance, like the 50-day and the 20-day and this trend line. And as you can see here, when we were going on a downtrend here, okay, the volume intensified, right? And now that we're going back up, the volume is decreasing. We had a real light volume trade, one of the lightest. This is the S&P 500 here through the SPYs. I believe on the NASDAQ we had probably one of the lowest volume days of the year. Or right in line with the lowest volume day. So again, on bounces up, we want to see higher trade, and that's not the case. Again, the volume patterns in this market very, very, very poor, in my opinion. For that reason, I'm remaining my 25% equity position, 75% cash. I think this market has a lot of work to do before it builds something meaningful. This is not building a base. This is basically a sharp move upward. The market gapped up today, this morning. Most of the move was done overnight as AT&T gobbled up another company in T-Mobile. They paid, I don't know, $30 billion. Who's counting after you get over 30 billion? I think 32, something like that. You know, and that event, in context, just that event can be interpreted as a bullish sign. Very, very rare. I mean, just the other day I was listening to somebody on CNBC reiterating that companies have just a ton of cash on the balance sheets, and that can be a bullish thing. Well, I disagree. I think cash reserves, the more cash you keep, is because it's the environment is not favorable to make new endeavors. New venture capitalism. There's really the environment is not favorable for either mergers or acquisitions or buying stock back up, because as the market turns more bullish, typically what you see is these activities start to pick up. People get a little bit more confidence, and companies start to invest the cash that they have. But again, that's just one pattern, and we are in the midst of a very, very steep correction now. And again, I would have much rather seen this market just trade sideways and just have mediocre volume like this. But no, we have to go ahead and wedge it up. This is wedging again. Markets, when you're doing this to markets, and the volume patterns are so poor on top of it, it's concerning. And again, we closed below the 50-day moving average, so that's our first point of resistance on the S&P. It's going to be the and again, looking at the spiders here, it's going to be that 50-day moving average. And it so happens now that the 20 and the 50 are meeting together. First point of support is going to be right at this low here. It's going to be right at this low here, put in on March 16th. Okay, so that'll be our first point. And then again, as I said before, the second point will be that 200-day moving average will probably do something like this. I don't know, but it'll probably be right in here, right in this range. Again, nothing bullish about this pattern, at least on the long term. I mean, it's just a sideways trail with a downward bias, with a poor volume pattern. So until things start to change as far as these patterns, whether it's just trade sideways for a while and settle down, and then maybe we trade in here and we settle down and squeeze and then we break out, then I'll probably add back into equity. But for this moment, there's no reason to. Still a lot of bad news in other countries. We had some good news over the weekend of as far as Japan's situation, nuclear situation, somewhat improving, but it is still not a good thing over there. So a lot of smoke in the air still, and we'll just have to wait. I hate to sound negative, but it is what it is, and it's not an opinion. I mean, they had a major disaster out there, and it's going to cost a lot of money to fix. So we'll just have to see how the market trades. Again, it has a lot of resistance, a lot of roofs, 1, 2, 3 roofs above it right now. So why would I even want to apply any new monies to anything right now with that type of overhead on top? So let's just see how the market trades, and again, coupled with the volume, and then we'll go from there. Again, guys, if you want to leave comments, questions, any of this stuff seems like French, the averages, I'll be more than happy to expand on that. Again, you can visit me at stockmarketplan.com, and on Twitter and on Facebook under Stock Market Plan. Have a great one, guys. Bye-bye.